7:43. Welcome back to Great Day for this Tuesday. It's the 14th of July as we welcome Patrick St. John from Collins Community Credit Union in the studio with us right now to hopefully answer some questions when it comes to mortgages. Because mortgages, obviously, for a lot of people, the biggest investment that they're going to have to deal with throughout their lifetime.
Is there a certain time of the year, good morning, by the way, thank you for joining us at the studio. Is there a certain time of year that's better to be thinking about mortgages than others? Like, is there a certain time that it's, you can tell I already know nothing
like
about
summer
mortgages.
or winter?
Yeah,
or,
like is there a certain time
Christmas
of year
time?
when we really should be thinking about our mortgages, or is that an all year
Sure, sure. I don't know that I would say it's based upon the calendar as far as when you should or should not think about your mortgage. It's very specific to your personal situation. So for example, if you just moved in July, you're going to think about a mortgage versus if you just moved in December. So it's not going to be based upon the time of year
it's
necessarily.
Not seasonal.
Mortgages are not seasonal now. Real estate, sure, to some degree. You know, in the spring, the real estate market typically is going to heat up a little bit because there's a lot more activity. There's people listing their homes. They want to get their home sold. They're going to move over the summer months. Maybe they have kids in school, so summer's a good time to move. Here in Iowa, of course, we've got weather. So in the winter months, it's not quite as convenient to move during the winter months. So real estate, absolutely. That does kind of run on a calendar, a cyclical basis year after year, but
not so much when it comes to mortgages.
No, mortgages are going to depend upon a lot of other variables in the market, you know, between what's happened in the stock markets, what's happening globally. You know, just as of late, of course, there's a lot of unrest over in Europe with Greece. That all is going to come into play and come into factor with what's going to happen with mortgage rates here.
Why is that?
Really?
Why is that?
So the entire financial industry, I mean, it's such a global basis anymore. And in general, typically, the better the stock markets are doing, the worse mortgage rates are going to do in general. But that's not the only factor, because again, if you have unrest on a global basis, maybe a significant weather event like we had down in the Gulf of Mexico. Now we see oil prices spiking. All those are going to work in conjunction with each other, in addition to some of your fundamental economics, is, you know, supply and demand. So, and it is, you know, when you talk to a financial advisor, should I invest my money now or should I pull it out of the market? You know, you really, it's nearly impossible to time it. More than anything else, your personal situation is going to drive when and when you should not look at potentially refinancing, potentially buying, selling, etc.
All right, let's talk dollars and cents here. Mortgage rates. What are we looking at right about now? What's the ballpark mortgage rate?
Sure,
right now?
and ballpark's the key term there, because mortgage rates again are going to be specific.
They change every day almost.
They can change daily, sometimes multiple times throughout the day based on what's happening in the market.
Okay.
So in general, your 30-year fix is running right around 4% right now.
Okay.
Is that good or bad?
Historically, it's very good, right?
Okay.
Fantastic.
Okay.
It's great when you look at the historical figures over the last 20, 30 years. We're still at a very great time in history to finance your home with a mortgage. Compared to 3 months ago, we're up about 0.5%. So it's all relative, you know, based on when you're comparing to. But again, and I'll say in general, because there's so many different factors going to impact your interest rate, mainly your credit score. How much you're going to borrow, how much your equity position is, what the type of property you're financing, whether it's a single family home, whether it's a condominium, whether it's your primary residence, an investment property. There's a lot of different variables that come into play there.
That all comes into play.
So that's a 30-year. The 15-year fix, though, is running nearly a full % lower right now. It's running around 3.125.
Now, what do you suggest for people nowadays? Because I'm hearing more and more people are leaning toward the 15-year as opposed to the 30.
Absolutely. I think my personal opinion, I think a 15-year fixed rate mortgage is vastly underutilized because you are going to gain so much more equity in such a quicker period of time. And if you look at the financial savings over a long period of time, such as 30 years. So for example, just quick math, say you're looking at a $100,000 mortgage, 4%, over 30 years. Just the principal and interest portion of your payment, roughly $500 range, let's say.
Got it.
Now you look at that on a 15-year term at that 3.125, your payment doesn't double because the term is cut in half. Your payment goes up by maybe a couple $100 a month. So yeah, over the first 15 years, you pay an extra $200, but your mortgage is done then. So now you just eliminated that $500 a month payment over the final 15 years of your loan. And if you compare those savings with the term of the loan, you're probably talking savings around $100,000.
Okay, now
between those two options.
let's shift gears. We only have a little bit of time left. Let's shift gears again. Let's shift down from 15. What do we have that's even less than 15?
We can do 10-year fixed rate mortgages.
You do have 10-year fixed.
We do have 10-year fixed. Typically, you're not going to see as much of a drop in interest rate between the 15-year and 10-year. So now we'll have to look at, again, your personal situation. Does it work with your monthly cash flow? There's adjustable rate mortgages, a 5-year, a 7-year, 10-year adjustable rate mortgages, which can be good products, again, dependent upon your personal situation.
If you're a gambler.
Well, not necessarily. Let's say you're in a profession where your employment's going to take you from city to city to city,
True.
and you know you're only going to be in a particular location for 3 or 4 years. You can get a much lower interest rate on a 5-year ARM than you can probably get on a 30-year fixed.
That's a valid point.
So you got a loan that's locked in for 5 years. Now you have much better control of your cash flow. So again, it's going to depend upon your situation and what's going to work best
And
for
quickly,
you.
down payment.
Down payment. So different options. 20% down is kind of the key number. Once you have 20% down, from the lender's perspective, that is a much lower risk than if you have less than 20% down. So you're going to get a slightly better interest rate. You don't have to pay what's called PMI, private mortgage insurance. So 20% is kind of that key number. If you have that, great. If you don't, okay. As long as you have 5% down, you typically can obtain a traditional mortgage, your 30-year fixed, your 15-year fixed, your 10-year fixed. There are programs out there with 0 down. Again, credit is going to come into play. You're going to need to have a little bit stronger credit. Your overall financial profile is going to need to be pretty strong, but there's a lot of different options out there today.
It sounds like it's very individualized, and the best thing would be to go in and talk to a professional and find out what your best case scenario would be. So
Absolutely.
I imagine people at Collins Credit Union are available to figure something out, and there's your details right there. If people want to find you personally, where can they go?
We have 2 locations here in Des Moines. We have one location which is inside of the Federal Building here downtown, and then we have another location off the corner of MLK Boulevard and Euclid Douglas, kind of right where that comes together.
Right.
They're just north of downtown area.